Hello, everybody. I'm John Locke, and I'd like to welcome you to the LockeInYourSuccess.com Trading Performance Podcast, where it's all about real traders, real problems, and real coaching. Listen up and enjoy the segment.
The big one is fairly evaluate your decisions. Your evaluate and your strategy. It's like buying a stock and having the market go down and being upset because you lost money. It's like, well, if you buy stock, you lose money if the market goes down, right? If you sell stock short, you lose money if the market goes up. If you're in a delta neutral trading strategy, you lose money when implied volatility goes up. You lose money when the price moves too much. There's no situation where you're going to make it impossible for you to lose money. You just have to decide where that situation is and how much you're willing to lose and how much you want to gain. If you know that, you can choose your trading strategies. But it's not fair to be upset if you're in a bull trade and the market goes down and you lose money, because that is the dynamic of the strategy. So fairly evaluate the strategy. It's not fair if you're in a broken wing butterfly and you get this huge down move with a big implied volatility increase and you end up taking a loss on the trade. Well, that's the weakness in the strategy. Yes, you can put protected. Oh, but now I don't make as much money. Or I put protected and the market went down, I lost anyway, which also happens. But there's always those weaknesses. And if you're in a neutral trade and you're getting the COVID crash and you lose money, I mean, that's not a problem. That's just something that happened once in your lifetime, and it's not something you have to fix. So make sure you fairly evaluate those trades and fairly evaluate your decisions. Again, if you have information afterwards and you judge yourself on the information you now have versus the information you had at the time, then again, that is going to be unfairly evaluating yourself and your decisions. Also key is to make gradual improvements. Just because we have a set of rules don't mean that we don't want to change them, or just because we're trading a strategy doesn't mean that we shouldn't be trading another strategy. But the reasons that we change strategies or the reasons we make improvements are extremely important. I might change a trading strategy. Say I traded a Super Bowl and I'm trading that now, and the market goes into a downtrend. I like this example because it's pretty simple. The Super Bowl, in order to win, if you think about it, and this is the other thing, a lot of people, they look at strategies and they look at them as just a set of rules that work or don't work, or make money that don't make money for now and forever into the future, instead of looking at them and saying, oh, what are the dynamics of this and when does it make money and when does it not make money? Super Bowl, in order for a Super Bowl to make money, we have a window in which to close the trade, which is after the next trade starts. So within that window, if the market is higher than it is now, I make money. If the market's lower than it is now, I lose money in that window. And most of the time, if the market's uptrending at all, in 65 days into the future, there will be a period of time in that 30 days or 20 days or whatever that is, where the market will be higher than it was today, and you can scoop that win and you can take it. This is not true in a downtrending market. In a downtrending market, that doesn't happen. Chances are in a downtrending market, in 65 days, the market's going to be lower than it is today. So I know those dynamics about the strategy. If I determine, from whatever way I determine, that the market has gone into a longer term downtrend, I don't want to be trading that strategy. The edge in that strategy is gone. The edge is that the market's usually up in 65 days. Now I'm entering a time period where the market's probably going to be mostly down in 65 days. If that's the case, I want to switch out into another strategy because I understand what's going on in the marketplace, and I understand what's going on with the strategy, and I understand when they no longer match up in a way that's to my favor. If I have a more complex trade, those dynamics are still present. They're just not as obvious to the trader. So there are certain dynamics in the marketplace that will be a disaster for a standard M3 trade that could line up. We just haven't really experienced them. We've experienced times when we've had a hard couple of months, but we haven't experienced times where we had 6 months, years of losses, right? Because the dynamics in the marketplace haven't really gone against that strategy yet. But at some point, They likely will. And my job is understanding with the M3, what are the dynamics that make that trade profitable? What are the dynamics that create losses for that trade? And once I know that, my job isn't to fix them and create another problem somewhere else. My job is to understand them and apply them to the marketplace when I know the marketplace is not likely to go against those weaknesses, or to shift to that trade when the market is going to be very beneficial for that type of a structure. All trading strategies have this. So I want you to get away from the thought, and again, I know you don't consciously think this, but really think about what you know about the strategy. Not only the rules of the strategy, but how it's affected by applied volatility, how it's affected by price movement, and how it's affected by each of those factors in different time frames relative to expiration and relative to where you're positioned in the tent. There's a lot of things going on there. You need to think about all those things and then understand the dynamics that are going to create problems for you. And then again, if you notice that those dynamics are happening or likely to happen in the marketplace, that's when you want to shift out of the strategy. That's a reason to shift out of the strategy. If you can make a minor improvement to be more adaptive to the new environment, then you can do that. Because so that's another thing. I'm expecting this new environment in the near future. I'm going to make this change in the strategy to accommodate for that. And I know by doing so that I'm creating this other problem if this other event happens in the marketplace, but I'm okay with that right now because I don't think that's likely to happen. That's very different from, like I said, having a set of rules and just assuming it's going to make money because it made money in the past. And that's the way that you really need to think. And that's the way that you need to make improvements in your strategy. And of course, most important of all is to always be fair and nice to yourself. This is just so important, so important. But if you do these things that we're talking about here, the keys to developing natural sense of self-confidence. If you do these things, you won't have to create false confidence that you're going to win every trade. This is the number one problem that people have. They're trying to create a false evidence that they're going to win every trade into the future. You don't have to do that if you have these keys. Because if you try and create that false confidence or that false evidence, that means you're going to be either overconfident or underconfident, pretty much at all times, usually based on results. And that's going to be an issue for you making money long-term in the marketplace. The other thing this is going to help with too is this is going to help you develop a natural sense of self-confidence, because in reality, all self-confidence means is that you trust yourself to risk reasonably and stay within certain parameter of behavior, and the knowledge that you are loved and you're truly enough just the way you are. A lot of people get into trading because they don't, when you go deep down, and like I said, I do a lot of psychological work with people. Deep down, they're in the market, they're trying to make money because they're afraid they're not enough. They're afraid they won't be loved. The reality is you are enough, you are loved just the way you are. Therefore, when you fully accept this and you allow yourself to be loved regardless of the outcome, it's going to make a huge difference in the stress and so forth that are related with trading. And it's also going to make it so that even if you try and you fail, you're going to love yourself even more for that. Because when you try and you fail, you're making an effort. You're taking risks. You're doing things that are going to create progress in your life. Remember, we talked about all progress requires failure, and happiness and fulfillment require progress. That being the case, we must be failing on a regular basis. And if we're failing on a regular basis and we're looking at it properly and we know we're enough and we love ourselves, we'll love ourselves even more for making that effort, because that's what's good for a human being. You know failure is the path to success, and that happiness comes from making progress, and that making progress is impossible without continuing failure. And that's something you can be confident about. So I will leave you with that. Really hope you take this to heart. Start treating yourself better, look at self differently, look at things in the market differently, so that you can develop the self-confidence you need to become fantastic as a trader.
And that is what I have for you today. If you have any questions or comments or anything else you'd like to see in the next Trading Performance podcast, please list that in the comments and I'll personally answer your questions and comments for you. Also, I'd love to encourage you to come on over to lockinyoursuccess.com. That's LOCKE in yoursuccess.com, and check out our Trading Performance and Pro memberships, where you can find the tools you need to become a much more effective trader, regardless of the type of trading you do. Thank you for joining me. I look forward to seeing you on the next Trading Performance podcast.